Hi, welcome to this video today, which is on Saturday, December 23rd. We're looking at a very interesting trade setup when the markets reopen on the 26th. Now, I think that this trade offers just outstanding risk to reward, thousands of pips potential profit, and the risk is pretty small in my view. Now, just before we go to the chart, just want to make a quick note about trading at this time of year, and I think I said it last week. A lot of traders, basically stop trading between now and the end of the first week of January, which I said last week is a huge mistake. Why? Because historically, in this period, more currencies form their high or their low for the following year. So it's very often a period where big trends start to emerge. Okay, and I think USD ZAR is going to be a big trend. Right, let's go and look at the chart and draw some levels of entry, stop and target.
On the USD ZAR daily chart, and just before we draw some levels, just want to go through the COT net traders positions. If you're new to our videos and unfamiliar with this tool, you can learn more about it on the link beneath this video by joining our mailing list. You just want to watch through right now. What we like to do is compare what two groups hold, okay, in terms of positions. The non-commercials in red, they're speculators. Commercials, smart money hedgers in blue. If the two groups go significantly against each other, we will normally always want to trade with the commercials. They know fundamental value for currency. They're very good at catching turning points as well. Now, in terms of how the positions line up this week, it's a really strange setup, okay? You got the non-commercials. They've got 11,779 long rand contracts, 4,317 short. So basically, they're bullish the rand, bearish the USD. Their ratio of long rand bets over shorts is 2.72 to 1. Now, what's really, really interesting this week is this commercial position. They're long the rand by just 20 contracts, okay? They're short by 7,717. So in terms of their bearish rand bets over bullish, they're 385.85 to 1. So if we take the total divergence by adding the groups up, we've got 388.57. Okay, now regular viewers will know we like a divergence above 10. This is obviously way above 10, and it's the commercials who are really skewing it. Okay, and I can see why the commercials are so bearish of the rand and bullish of the USD. And I'm just to take a typical quote of why the rand rallied. Rand's rally was ignited by Deputy President Ramaphosa's victory in the race to be the leader of the ANC following a campaign pinned on tackling corruption and pushing business-friendly policies. Well, okay, that's now in the price, in our view, and he's got to deliver. I'm not going to go through the fundamentals of going forward, how he's going to do it or whatever. You've just got really an emotional spike. He's got to deliver. Prices have just moved too far in the short term. You can see it technically, okay? Look at this candle here. This is on the news, okay? Know what she does, this candle? She deviates by +2. And what I mean by that is she come outside of an outer Bollinger Band, which is a 2 deviation. I'm just using the standard setting. While she comes back in, she again way outside of a 2 deviation, still outside of a 2 deviation, comes back in, okay? And now she's coming down, try and go outside the 2 deviation again. Now, this is just my experience. We get a big spike that deviates by 2, and then you come back in, you try and come back out again. You normally don't get back outside or back outside by much before a rebound. That's just my personal experience of using deviations. But in terms of how would you play this trade? Well, you've got a double bottom over here, which I see has, well, we can see it's just been kind of taken out. There we go. Now, obviously we finished very weak on Friday, but it was a basically low volatility day, and we're coming to the deviation again, try and get outside of it. What I would do is, because of the way the commercials are so bullish and this price spike down is so exaggerated, I just come back in through something like 1261.50. Just get back above this double bottom, and I would come in with a small position and look to add, because you've got obviously here as resistance as well. So a small position in through here, and I'd add as soon as we get through there. You could, if you want to be conservative, just wait for this level, but I like to be aggressive. So I'm going to scale in with 2 trades. Where would your stop be? Well, obviously you've got the band here. You've got this spike tail outside. You've got to be back from that spike tail. It's going to be below 250. You want to be something like, you could be 249, 30 if you were wanting to be close. 247.50, I think, should do it. And then look for a rally. Now, how far could we go? Well, what I like about this from a pure technical perspective is what you have is you've got a fairly gentle trajectory as we come down here. And then we do what I call falling off the cliff, and then we should bounce back, okay? So in terms of where should we go to, I personally feel back up here. The whole spike for me is going to be retraced. You could use the 20-day moving average, see if it gets through that, because it's obviously going to snake down if we do come up. But personally, I just think this is going to bounce back. It's going to bounce back hard. If we look at momentum as well, stochastic oversold extreme, RSI oversold chart extreme as well. And we've said it in numerous videos, big price spikes never last. They always are retraced, or a good proportion of them are retraced. And with the way the commercials are viewing this chart as well, I just think it looks a fantastic risk to reward trade. Now, in terms of this move down, I've said we want to come back to here, but I've got a feeling in the new year, emerging market currency is going to get hit hard. And I'm looking for the dollar basically to retrace longer term back up to the 1440 level. But that's a little way off. For the time being, what we're going to do is see a move back to here. It's a really good risk reward trade. It's about 4 to 1. I really like it. And you're not going to need big size to make decent money out of this one, in my view. So, a little small size in. I'm doing my trades, times 2. But let's see how we go. But I think when we open up after the Christmas period, I think this is a good risk reward trade to look out for. So that is the video for today. Thank you very much for watching, as usual. Take care. Have a good day.